Good morning. Thank you for tuning in to another pre-market pulse scan. The time is late. It is 18 minutes after 9 a.m. Eastern Standard Time, Monday, April the 24th, 2017. Jumping right into the overnight situation. Japan's Nikkei is up 1.4%, and there's been a lot of going back and forth with the French election. We're going to the next round now. I think voting will begin for that next round on Wednesday. In between now and Wednesday, we have some government reports coming out here in the U.S., so it's going to be all over the place. For instance, bonds are down more than a point right now at 153.01. Remember, I believe we hit like 155, 156 last week, so it's still pretty strong right now. There's no way to squeeze another rate hike in there just yet. We're going to need to violate the supports in order for that to happen. And right now it's not happening. Still in retracement off the lows. Talking about the bond futures. The Dow's up 188 at 20,691. Still well below that 21,000. So the argument is the Dow will be able to make up the 300-point difference as a result of these elections. I'll pause right here for a second. Remember me telling you guys a few episodes ago about the global market, and I was explaining to you how the algorithms are all attached globally, how they've been working overtime to connect all the exchanges, connect all the algorithms, the same programmers on this side of the pond or the same ones that are being used on the other side of the pond in consulting. Well, when have you ever known a French election to be able to arrest the U.S. stock market and keep it not moving at all for an entire week? And then all of a sudden, when the first rounds of elections in France are taking place, now the Dow jumps up 200 points. For no other reason, not because of earnings, not because of any of that stuff. Nothing positive here in the States, but because of what's happening in France. All right, that's that global market connectivity that we've been speaking about. Just wanted to point that out. All right, looking at the NASDAQ 100 futures, we're at 57 points, which is a big run for the NASDAQ. Just shy of 55. Right now, we're at 54.99 and 3/4. We just came off of 55.0675, which is a new all-time high for the NASDAQ 100 futures. By the way, keeping all things equal, it is more than 500 points higher than it was right before the NASDAQ bubble popped in 2000. So we've bested that old all-time high by 500 points. It should also be noted that during that time, innovation was amazing in the tech sector. We had the internet blowing up and all these internet companies, and it was just a wild time to be a .com or anything like that. So we had innovation. We had a roaring economy. All right. And now we've exceeded that by 500 points with a dead economy. So first hand, we had a roaring economy. Second hand, we have a dead economy, and we've bested the all-time highs of the roaring economy by 500 points in a dead economy. It should let you know the shift that has taken place, and it's right before your eyes. On one hand, we had people going forward. Now we have a dead economy where you have the walking dead as far as people are concerned. Human beings have become the walking dead, the zombies, and now the machines are the ones that are employed. Interesting shift in realities. Looking at the S&P 500, it is up 23.5 points at 2371. The Nikkei is up 345 points at 18,995. It still needs to get to that 20,000 mark in order for the real global bull market to take off like you've never seen before. All right, looking at crude oil. Crude oil is still struggling around the $43 handle. We're now at the overnight low at $43.37.5, down a quarter. The euro up 172 pips. It likes the election results. We did hit an overnight high of 109.32, and we're sitting at 108.96 now. The pound is off only 2 pips at 128.12, and the Aussie is up 26 pips at 75.56. Gold right now is down $17.80 after being down more than $20 in the Sunday's trading. Right after the market opened on Sunday, it gapped down and opened down $20. All right, we're at 1271. The market came off a 1266 low. Looking at silver, silver's down 8 cents to 1777, bouncing off a low of 1755. And nat gas is now down about 4 cents at 306, still hovering around that $3 mark, hovering above it. As long as it can stay above $3, I think that the next leg higher will get us a close above 350. I think that the global demand picture is still strong for natural gas. I don't think we've even seen how far and how fast this thing is going to run. There's a lot of moving parts in the nat gas story. And for those that are in the know, this is a situation where it's weird the way the algorithms are moving in the nat gas, because I'm still long the nat gas and short-term short the nas gas. So stop didn't get hit on the long, but got triggered on the inverse ETF long. So it's a weird scenario going on now, and we just ride it out. We run with it. You know, money is money. All right, let's look at some charts. All right, looking at the gold chart, you can see the screen here on the gold chart. This is a weekly chart. You can see where the momentum line is here at that 1266.80. As long as the market can close above 1266.80 on this weekly chart, we still maintain bullish momentum going forward. It should also be noted that you can best the momentum line in intraday trading as long as you do not close below it. Spikes can occur. All right, it happens. On the way up, you can see back here on the week of the January 23rd, where we spiked below it intraday and closed above it, and the next week we took out the prior highs, even though we also traded below the momentum line on an intraday basis, and we kept it moving. All right, now here where we closed above it, then we end up losing it. We spiked below it on the intraday, and then for the week just trended down and closed below it, setting up a possible scenario to put an end to the bull run, only to head fake, explode higher, regain the momentum on the next bar here, and then we've been off to the races ever since. So in a healthy bull market, you do have corrections along the way, albeit they're not, powerful, sharp corrections, but they are corrections. All right, you still maintain your trend line supports, and you still maintain your bullish momentum. That should be noted here in the gold. So I'm really not moved by what's happening here, unless we give up the ghost like we did back here on March the 6th of 2017. On that week, we lost the momentum, but then the next week, we quickly gained it back again. So even if we do lose the momentum here this week, chances are we're just setting up for the next leg run up higher. It should also be noted that the last time that this happened, we did run from 1204 all the way up to 1297, just shy of the 1300 mark. So you're looking at a possible $100 run, even in the face of any possible correction, all things being equal. Everyone get that? So the argument for gold is that the March It's not over yet. It is still in a healthy situation. It should be noted, though, just by analyzing your trend lines here, that we did get a cross here on the intermediate term support above the long-term support. So this is positive going forward. The only situation that we're still dealing with is we are still within the Kumo cloud of death. Prices need to close outside of this Kumo cloud of death for gold to really have a fighting chance to close above 1300. All right, so we could consolidate for the next couple of weeks. It's possible, I'm just saying it's possible, depending on how the market moves, that we may not get out of the cloud into maybe I want to say, it may be 4 to 5 weeks more that we have to be inside of this cloud. All right, so I'm going to call it 4 weeks. We got 4 weeks to get out of this cloud. All right, and if we can do that, then I think we're good to go. 4 weeks to get out to the top, to break above the top side of the Kumo cloud. All right, so that is our gold analysis. Now let's take a look at the silver analysis. All right, and there's our opening bell on the equity side of things. Okay, now with your silver, it's a slightly different scenario, just slightly. Back on March the 6th, the week of March the 6th, that close, we lost momentum here too, only to regain it back, not the following week. We had an up week, but we did not gain back the momentum into the second week. All right, so all things being equal, if this one loses here this week, it's not necessarily the same setup as March the 6th. Reason being is because you're right here at trendline support. So if it breaks the trendline support on this side, this time, it's a key support. So it drops us below the Kumo cloud. We don't want to see that. The last time we dropped below the Kumo cloud was back on the week of December the 19th of 2016. The reason why that wasn't as significant because we still had a ramp. Even though the market was trading below it, we still had a ramp on the top side that helped lift the prices. Even though that was a strong resistance, by the time we got to the week of January the 23rd of 2017, there was enough pent-up energy and positive momentum that helped lift the price up and over and inside of the Kumo cloud. All right, so it's a little bit different scenario this time around on the silver. You don't want to see this losing of the trend line support and momentum going forward. It should also be noted that it's starting the week off with negative momentum. All right, silver is starting off with negative momentum. All right, we lost that momentum last week. It needs to regain the momentum. So what we're looking for silver for this week, we need a close above $17.94. All right, gotta have that. All right, we want to see that. That will lock us back in on the bullish picture and get the market the strength that it needs to get to the top side of this Kumo cloud. It's going to need to get above $19. That's what we need. We need a close of $19 to get us out of the Kumo cloud. The consolidation picture going forward for the silver, though, is a little bit more murky because we have an elongated scenario here. This could stay inside of the Kumo cloud technically for maybe 5 to 6 weeks. It should also be noted that this last ramp here is still intact, but like I said, barely, because here we are. We don't want a close below 1747 this week. All right, we cannot afford that. All right, we lose momentum if that happens, and sellers will come in and beat this thing down to 16. All right, so that's what we're watching in silver right now. All right, it's still technically bullish slightly because you got your intermediate trend line above the longer term trend line support, which is good. All right, it's giving you strong support now in the way that these are just elongating out. But we also need them to start to rise within the Kumo cloud to help lift price outside of the cloud. And so far that hasn't been happening. And they're kind of low too. And you can see the momentum is starting to push down a little bit, turn down. So this is a possible bearish scenario. It's going to have to fight this week to get out of this. If it doesn't, it's doomed, and it will drop hard like a rock. You're going to start to see these bars here come into play on the downside. This is nasty. I point you to October the 31st. I'm sorry, the week of October the 3rd of 2016. That was a nasty week. All right? This possibility could set up again at a break of this trend line support, especially if we close outside of the Kumo cloud to the bottom of the Kumo cloud. All right, we do not want to see that. We do not want to see that. All right, let's look at oil, because there's been a lot of talk about how oil is affecting things as well. All right, so some analysts would say that cheaper oil is like a stimulus to the economy. All right, there's a lot of arguments that can be made for that. That is not my beef with it. I could care less about all that. I'm just looking at the price action. The price action is suggesting that we are still, no matter what anyone says, I do not care. Just look at the price. That's all I got to say. Look at the price. We are now at the same price. Look at my my crosshairs and my cursor. See the white lines? We're still at the same price, in the same price zone we were in back in October the 3rd of 2016. The week of October the 3rd of 2016. Oil is still living in the past. It cannot get out of the past. We have to escape the time loop of the week of October the 3rd of 2016. We're stuck in a time loop in oil. It is a very wide trading range. I've gone over this. You have key supports at 47.10 and your resistance is at 55.25. So you are looking at an $8 trading range. All crude oil is doing is running from the top side of the range down to the bottom side of the range. Now we're here rising and falling, just rising and falling within this trading range. There is no clear direction as far as trend is concerned. Yes, the overall trend is bullish. We're bullish. We're above the Kumo cloud, and the trend lines are above where they need to be. But your momentum's been coming off, and it's been sideways. You lock it in, then you lose it. You lock it in, you lose it. All the while, you're not making any new highs. And you really aren't making new lows either. All right, so this market is just in a wide trading range so that they can have something to talk about. So if it moves, you know, $1.50 or $2 within that range, it looks like, oh, crude oil is really moving. Well, if you got $8 of trading range to play with, and it goes from the bottom side of the range and rallies $6 or $7, you can say, oh my goodness, oil, it moved $6 or $7 today. What an explosive move. All it did was play games with you inside the trading range. There's nothing happening. Just another, and then when fools jump on board, when it gets back up to the top side, it does this on you. It does a week of March the 6th of 2017 on you. All right, see what I'm saying? So this is what we're looking at. This is the story. So there's nothing else to see here. You know what I mean? All right, questions. We'll say the questions to after we finish. And we're about to finish now the YouTube section, then we'll get into the question answers. All right, so remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Peace.